In this video, I'll be covering my recent portfolio moves, February portfolio performance, and some other market thoughts. This video will be a bit longer since I haven't had a video out in a few weeks. Before I start off with the portfolio performance, I want to share full transparency on a couple things. First, I currently manually update this Excel sheet, so sometimes I forget to update the share counts when dividends are paid out and reinvested. And for larger positions, it can impact the actual performance. So some of the dividends in December and January are reflected in February here. I am working on a more automated way to track the portfolio. And second, I did deposit 5,000 this month into the portfolio, so performance is a bit inflated from that as well. And you can see here I do track the deposits and withdrawals that I'll make on the portfolio. In any case, February was a good month as the precious metals rebounded. The portfolio is up about 9% with the cash deposit and up over 12% year to date. Obviously, this is primarily tied to my 50% weighting in the precious metals sector. So my portfolio performance will fluctuate with how the bull market unfolds. I expect a period of down months at some point unless we actually move into a blow off top really quickly. Now, of note this month is that some of the recent sales of positions boosted my cash position from 15% to 17%. I'm continuing to look for opportunities to deploy, but unfortunately right now many of the themes I'm interested in are elevated, so I'm patiently waiting for a pullback. Looking at my position changes the last few weeks, I have 5 highlighted in yellow here. Starting off with Osisko Metals. The copper stocks have been on a tear, and as I've talked about in previous videos, I want to follow my strategy of taking 10% off over time into strength. This is a company I expect to hold for many years as the copper bull market unfolds into the 2030s, but I'm okay trimming based on its performance and how large a weighting it is in my portfolio. It's now my third largest individual stock position at current prices, even after me selling 10%. The price I sold at was about 117. I may sell another 10% soon if there's continued strength. Next, I decided to sell my position in Tesla. I could talk about all the thoughts here for a long time, but here's the gist. Tesla's valuation for over a decade now has continued to be staged on future growth. While they've achieved a lot of growth across that decade, and I do expect they will continue in the future, the valuation feels just blown out based on analyst projections of cash flows from autonomous taxis and humanoid robots and other things in Tesla's future. And from all the research I've done, a lot of that growth is already priced into the stock as perfection. And so while I think those technologies are revolutionary and coming, I do think things will take a bit longer than people think. And I also expect broad market weakness sometime this year, which perhaps has already started, but I'll touch on that later in the video. If we take a quick look at the financials, Tesla's net income and margins have been shrinking the last couple years, and just considering cash flows, they're at a 1.5 trillion market cap at current prices with 4 billion in net income last year. That's 375 times free cash flow. Even if you take 2023's net income, it's still about 100 times free cash flow. Conclusively, I do believe in the future, but I'm just skeptical of near-term fundamental improvement. So I'd be interested in buying back at lower prices if they came. Next, I sold my entire position in SBSW, Sibanye-Stillwater. This was a really tough decision. When I thought about this position, ultimately it's a bet on an increase in platinum and palladium and less so on gold. If I recall correctly, SBSW gets about 30 to 35% of their revenue from gold. Now, personally, I'm deeply bullish gold, and gold specifically. That's where I want the majority of my bet. I'm still interested in platinum and palladium, but just less so than gold. So when I look at those markets, here's a long-term view of platinum and a long-term view of palladium. And if you look at platinum in particular and just how vertical the move has been, I think it's the right decision to reduce my position in those markets. This is different than something like gold, even though gold's move has also been vertical. Central banks are buying. It's the actual store of value, right? The history is there. There's so much going for gold that I'm just not as sure about with these other markets like platinum. So I think it's the right decision to reduce my position in those markets. And I like SBSW the least of the other platinum names I have. And so, notably regarding this, I do still have my positions in Impala Platinum, Anglo Platinum, and Stillwater Critical Minerals. Next, I made a small add to my position in the crypto HBAR Hedera hash graph. I've followed some of the content from a guy named Mike Maloney over the years. He has a great series called The Hidden Secrets of Money. I'd recommend people watch if they haven't. It's just a great background on the history of currency versus money, currency being fiat money like dollars, and real money being something like gold. And so Mike Maloney is a supporter of this project. My understanding is it's a platform you can build decentralized applications on, similar to Ethereum, but it's cheaper and more scalable based on how it's built. And you're seeing ecosystem growth and interesting companies joining the governing council and getting involved with the project to look at use cases for supply chains, logistics, and others. For example, FedEx recently joined the governing council, and Google, IBM, and Boeing are all already on the governing council. So these use cases are a very real possibility, and the moves we're seeing are tangible evidence. So I like the idea of a small bet. This ad brings me to a total position of $1,000, and I'm good keeping it there. Lastly, I started a position in IBM, and I'll accumulate shares on deeper pullbacks. They've been a relatively stagnant company growth-wise for many years following the dot-com boom, but I like their industry leadership with their quantum computing ecosystem. There's also the AI, cloud, consulting, and infrastructure services and overall full-stack integrations that I think may keep them in a competitive edge. Depending on the price one gets in at as well, their dividend is attractive, which is 2.8% at current prices. I'm not looking at a huge position here. I'd be okay accumulating to roughly a 3K or 4K position, which would be about 0.5% of the portfolio. Moving into some market thoughts. For the precious metals, I have no change in outlook from my last videos. According to cycle analysis, there may be a major top or bottom sometime in April. Obviously, at this moment, it's looking more like it's going to be a top. But in any case, even if it is a top, I do believe it's an intermediate top, and we still have another leg or multiple legs of this rally or parabolic move. So giving some time for an intermediate cycle to play out, which based on historical analogs could take anywhere from 3 to 6 months or less or more. I think a move late this year or early next, another significant leg, makes the most sense, but that's just a guess. My target for this cycle is still about 7,000 to 8,000 for gold. And that is where I suspect I will take the majority of profits in the mining companies and whatnot, and also a lot of the physical silver holdings. I think my physical gold, I do expect to keep that indefinitely. I think it's good to have some precious metals on hand for savings and just as a small hedge against any potential uncertainty in the future. That being said, things can change at any time though, so subscribe to stay up to date and follow me on X, link in the description for real-time buys and sells. Looking at the stock market, cycles point to a correction sometime this year, and as mentioned earlier, it's of course possible it already started. If we did have a deeper correction, I'm eyeing somewhere between 12 and 20%, so I marked 16% from recent highs on the chart here. If it manifested, this is where I'd start picking up some shares of companies I've been patiently waiting on for the investing account of the portfolio, where I expect to hold the companies mostly indefinitely. There will always be adjustments as things change, though, of course, like Tesla, but I think it's a good strategy as a retail investor to not try and pick and choose who the winners will be long term, but instead just focus on having a solid basket and bolstering it with diversified, more index style ETFs like SCHD, VYMI, and some of these others. I'll note as well a primary goal of the investing picks in that account are dividend growth companies, and you'll see that theme. So I'll share a few names of companies I'm looking at. One is WM Waste Management. They're basically a garbage and recycling services company, which is largely resilient to economic volatility. I had an alert to buy at the 200-week moving average in November last year, but unfortunately, I never made it there. And this is a great example of why dollar cost averaging is very effective. You never know where these will bottom. And so I would have been better off just starting a small position when it broke these lows here, and then I could have just added more aggressively if it got to the 200-week moving average. And if I flip back to IBM, you can see that's kind of what I'm doing here. I started a position when it broke these lows here, and I would get more aggressive if it broke these lows down here and goes into the 200-week moving average. Another pick is AVGO Broadcom. They're a chip maker who continues to have significant growth. Similar to Waste Management, but different time of the year, I planned to buy at the 200-week moving average in April last year. But again, it never made it there, sadly. Another is BRKB, Berkshire Hathaway. This is Warren Buffett's company. They typically outperform the market, so I like adding shares on pullbacks. There's also a couple covered call ETFs of the S&P and NASDAQ indexes that I like. SPYI is the S&P and GPIQ is the NASDAQ. Covered call ETFs are funds that sell covered calls on their index holdings to generate cash flow returned to shareholders through dividends. So these yield anywhere between 10 to 12%. And the reason I like these funds in particular is that they don't do 100% options coverage on their positions, meaning they don't sell calls against their entire index holdings. What that means is that for whatever portion they don't sell options against, you get gains on the appreciation of that portion of stock. And so that's why you can see from the lows in April, not only do you get that yield, but you've had appreciation in the price of the ETF as well. So these are good in a bull market when you're buying on a pullback. You can learn more about covered call ETFs from Dividendology, who I'm showing on the screen here. The last pick I'll share is SCHD. This is the Schwab Dividend Growth ETF. It's actively managed and, in my opinion, the best dividend growth ETF out there. So I like accumulating this as just a simple way to have a index fund that it actively gets updated over time by the management team so that I don't have to manage continuing to recycle a very large portfolio. And in time, I expect to have this ETF be my largest holding in the investing account and eventually my largest holding overall. The reason it's not yet is because I'm still on the younger side. I'm okay taking more risk, and I just started diversifying into longer term, safer investments like this just a year or two ago. So it will grow over time. I have other picks I'm watching as well, but I don't want to make this video too long, so more to come in the future. That's all for this video. Thanks so much for watching. Let me know any questions in the comments below, and I'll see you in the next one.